This is a Stock Trading Reality Podcast, episode 186.
Yeah, I tried a couple. One of them didn't work. I got out, and the other one I held on to for about a year and a half, and finally just like, forget it.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. Need some quality French toast? He's your man, Clay Trader.
Yeah, I am totally the man, and maybe this sounds cocky, but it's the truth. It's one thing that in the world of cooking, I've kind of latched onto, and I pride myself in it. Sure, my critiquers, my judges, I don't know if critiquers is a word, but...
Gordon Ramsay?
No, yeah. I think they're a little kinder than Gordon Ramsay, but my 4 kids, they absolutely pound the French toast when I eat it. But there's a secret to French toast, and it's that you have to use the right bread. And I can't even say what the bread is, so I'm not going to say it because I realize it's kind of a massive oxymoron that I'm sitting here acting all cocky about my French toast abilities, and then I can't even pronounce the type of bread that I use. It starts with a B, though. I think brioche, brioche.
Brioche, you got it.
Yeah, brioche. So that's kind of the trick. If you can find yourself a good bit of brioche, then French toast is going to turn out a whole lot different. So Ches, our co-host, already chimed in to help me out. So that's why he's award-winning co-host for sure. But Ches, so many ways I could take this. First off, first bullet point, do you even like French toast? Second bullet point, have you ever made French toast? Third bullet point, are you good at making French toast?
First bullet point, I know what it is and I do like it very much. Second bullet point, I have made it. However, Kelly is a much, much better French toast maker. And my logic for this is that I try to avoid bread, pasta, kind of processed carb stuff throughout the week. So Kelly doesn't have any real dietary restrictions like that. So she'll cook with bread a lot more often than I do. However, prior to that in kind of Chicago, I worked for Jimmy John's and there was a bakery right around the corner. So I could always get bread and make, French toast with pretty much any types of bread I could get my hands on that were freshly made that day. So yes, I like to think I'm good at it. I have in a pinch made it for Kelly and she said it was good and still ate it. But yeah, Kelly definitely has me one up there. She is a much better cook with bread than I am.
I think maybe at the next meetup we do, maybe I can just make French toast for everybody. We can bring in just brioche by the pallet, and then it'll just be a French toast. French toast and beer, does that go together?
Yeah, I'm sure we could find people that'll be a taker. I'm sure I'd have a glass in my hand, but yeah, we should do like some breakfast thing and for the dinner stuff or something.
Yeah,
but
I don't know.
Breakfast for dinner. I don't know. We'll figure it out.
Yeah, we got to start to spice things up. Anyways, let's move on to today's interview, or tonight, or whenever you happen to listen to this. But we talk with the unknown. Josh is our guest name. He is a member of the community, and as Ches and I kind of established up front, we're not really that familiar with Josh. So this was an interview where it's literally about as real and unscripted as it gets. Other people, I say those are all still real, but you talk with people in the chat room, you get an idea, you kind of get to know them through the chat room, and then you talk them on here. So you still don't know all the bits of their story, but you have an idea. Here, Ches and I knew nothing. We went in totally blind. So this is about as real as it gets, and it was nerve-wracking, but a good time. So with that being said, let's sit down and hear about Josh and his journey. Josh, welcome to the show.
Thanks for having me.
Now, it's Ches and I, we pride ourselves in doing these as much of keeping it realistic as possible, as unscripted as possible. And I got to be honest with you, Josh. Do you hang out in the chat room? Because off the top of my head, I'm not very familiar. I may look stupid here. Maybe you're like always posting in the chat room and I'm not making the connection. But are you in the chat room much? And if so, what is your alias?
I'm not in the chat room that much. I just kind of jump in and out a little bit just because I work a day job. But my name my ID is just basically my name. It's my last name, Donahoe, and _ Josh.
Okay. So
I feel like I've actually seen him in there before, but just not all the time. Like you said, you work a day job.
So pretty much you are a member of the community, but you just more so hang around in the background and observe whenever you can due to your job. Is that a fair assessment?
Oh yeah.
Okay, perfect. Well, this is Ches, I'm excited because this is literally I have, for all we know, Josh doesn't like us that much, and he's about to bring the sledgehammer at us. I mean, I honestly have no idea. So this is I'm a nervous, but in a good way. How are you feeling, Ches? We're going into the unknown.
Josh, please bring the sledgehammer down upon Clay. He needs a reality check every once in a while. Everyone's always blowing smoke up his behind. So yeah, lay it down.
I have no idea what's coming our way. But let's start at this beginning here, Josh. Where did you hear about the markets, and what got you interested enough to eventually kind of want to get more hands-on with it?
Well, I originally first heard about the markets when I was in the military, but at the time it's like I heard about it, but I didn't really like jump into it or anything. I just kind of like, yeah, that sounds interesting, but at the time I didn't really have the resources or anything, or basically didn't really have the resources and didn't really have the motivation at the time. And then once I got out of the military, yeah, I mean, I got out in probably like 10 years ago, and it just, I never really got around to jumping into it until I met a guy at work, and he kind of didn't really coach me, but he kind of like, I guess gave me that little nudge to get me really interested to get into it. So I went and showed me how to open a brokerage, and I opened it up and made a couple of trades, and as you can imagine, it didn't go so well, but it kind of got me hooked a little bit. So I started searching the internet for how to basically trade stocks, and from all your other podcasts you've done, you pretty much guess what I did. I got on YouTube and all that kind of stuff, and kind of looked around for a while, and then
and there's a ton of information on there. But first off, thank you for your service. But second question, I'm assuming even with your time in the military, you had, what is it, a TSP, the Thrift Savings Plan? Is that right or no?
Yeah, I had that.
Okay, so you pretty much had that, you were contributing to it, and you just kind of let it ride, right? You weren't messing with it or trying to move it all into penny stocks or anything crazy like that?
Yeah, I'd never touched it because at the time I was just like wanting to save it.
Gotcha. Yeah, no, that makes sense. So, so you hear about it from your buddy. Now, did he tell you what he was doing? Was he kind of, just riding the market as it's on its way up, or was he doing some penny stocks or anything like that? Or, what was he suggesting that kind of piqued your interest?
Well, he's really into marijuana stocks, and he kind of suggested a couple to me, and at the time I didn't really know, that he didn't have a strategy. His whole strategy was throw money out and see what happened. Is basically what happened. So, but at the time, I took a couple of his advices, and one of them didn't work out, and the other ones didn't work out either.
Now, what year was this? Just because marijuana stocks, that's probably going on about 5 years ago. But you had mentioned about 10 years ago. So I guess when exactly is this sequentially, and as far as the timeline's concerned?
Yeah, it's kind of a gap because there's probably about an 8-year gap between the military and when I actually started trading.
Okay. So you got out of the military, you said about 10 years ago, and then 8 years from the time you got out of the military, nothing was happening. Am I understanding?
Yeah.
Okay. All right. So that makes sense. You came in 2 years ago, marijuana stocks, that was Ches. That's kind of old news at that point. Now, if he had showed up like 5 years ago when...
Yeah, I was just going to say he was at the tail end for sure, though. But I was trying to think, I was like, what year did I join? Because that was booming. I thought it was like 2014, 2015. So yeah, it sounds like the tail end of it. So that buddy's just throwing good money at bad, apparently.
Now, was he, to kind of piggyback off Chez's question, was he telling you that he had already had success? Or is this just him kind of, talking in theory about, hey, this is going to go big, this is going to happen, this is gonna, or had he actually already had some success?
Well, he's already had some success. He's been doing it for years and years. And so basically he just came up to me one day and suggested one. So I'm like, well, you know what you're talking about. So I just threw some money into it and see what happens.
Now, as
far as he...
Go ahead.
As far as he goes, he's had success. He's a fairly wealthy guy, but basically his whole thing is just put money. If it doesn't work, get out and find something else, throw money at that, and just keep repeating that same process.
Now, does all this money he have come from trading, or is he like a business owner or a doctor, or where exactly did this wealth come from?
He started off in a home, or what's it called? Basically, in buying and selling homes.
Okay, so he invested in real estate and was flipping real estate then.
Yeah, he flipped real estate and then he got into stocks, and now he just stocks.
Okay, all right. Because based on the strategy that, well, you just get in and if it doesn't work, you get out. I mean, that's all sounds good, but that's still pretty general. But that makes sense that it sounds like his money must have come from more so the real estate but again, if he did stumble in during the when the marijuana stocks were booming, then yeah, I can definitely see him making some money. As you know, that was definitely a bubble, and during bubbles, everybody makes money, assuming you have a pulse. But anyways, he gets you involved, and it sounds like there was zero success, or I mean, the way you talked, it didn't sound like any of those ticker symbols he gave you worked out.
Yeah, I tried a couple. One of them didn't work. I got out, and the other one I held on to for about about a year and a half, and finally just
all right, so that sounds like a pretty bad train wreck.
Yeah.
Okay, well, we love to hear about train wrecks, so I'm not going to let you just skimp over. I mean, do you remember the ticker symbol?
Yeah, it's a vape. It's called, yeah.
VAP.
Yeah.
Yeah, I remember vape. That thing, I remember doing video charts on that thing when it was a 000 stock. What price do you remember buying it at?
I bought it at 1 cent.
1 cent. All right. So, I mean, and this was based solely on your buddy, or was this your buddy plus some influence of social media, plus some influence of message boards, or is it just strictly your buddy?
Oh, just strictly my buddy, because I didn't even know to even gonna look at social network and stuff.
So you fully trusted him, and I applaud your honesty here, because that sounds, no, I didn't even know what to look at, but you're throwing money. But I mean, if you trust somebody, then I mean that goes a long ways. So what was the premise? What was the reason that, you know, your buddy was telling you that you should have been buying? Sure, it was a marijuana stock, but was there any more than that, or was it just, hey, it's a marijuana stock, trust me and buy?
Well, for him, he kind of explained to me that because this company, like every 2 years, it has like a big pop to it, because it goes from like 000 to like, you know, I think at one point it was up to $40 at one point, but 3-4 years ago, and then it fell back for 2 years, popped up to $20 a share, and then fell back down. So he was kind of riding on that it's going to pop up to like at least $10 to $15 a share. And so
now, for your listeners out there, you know, the logic makes sense. It absolutely
Ches,
does.
Can I step in here real quick? Because
go ahead.
I don't know, Ches, you're super, can you, if not possible, Ches, but VAP, I'm pretty sure, this is a major red flag here as far as your buddy's concerned, but I'm pretty sure vape only was at those levels on the chart because of reverse splits. I could be wrong, but Josh, do you know if vape, the only reason why it was at $40 and $15 was because of reverse splits?
Oh, I couldn't tell you.
Okay, because here is, I think, we have a major learning example, is your buddy is telling you, hey, look, well, it spiked up to $40 and then it spiked up to $15 before, but that's...
So there was one split in 2014, so I'm not sure if he was past that or not, but so pretty much after 2014, it had never gone above like a $3. Okay. Well, actually, yeah, it got to about $10, and that's about
after the split it did. But
after the split,
the point here though is that because when a split happens, the chart adjusts proportionally with that. So past history, case in point, right now, HMNY is one where people are like, I can't believe this, or DRYS, that's even better one. DRYS, Ches, again, if you want to pull up the chart, what does that one say it used to trade at? Like $100,000 a share or something like that? Can you, because my charts are closed down, but Ches is...
Yeah, I got it up here. So it looks, oh my gosh, like 400 million or something. I don't know. There's too many digits on my screen, and it's just we're over 40,000. There's 400,000. It's in the millions. Okay, actually, it's in the triples.
All right, so we'll just go with $400,000. So to the untrained eye, somebody could look at that chart and be like, "Holy crap! DRYS used to trade for $400,000 a share." Well, no. That's because there's been a million reverse splits. But whenever a reverse split happens, the chart adjusts proportionately and past data becomes really out of whack. So to hear that your buddy was like, hey, this thing used to trade here and we're going to play all these spikes, it sounds like your buddy might have overlooked the reverse split thing because, yeah, that's a failed premise on the fact that, and Josh, and I'm sure you realize this, so I'm talking to just listeners right now, but you always got to be very careful. If something seems like, wow, I can't believe it used to trade that high and now it's only trading for this low, that's deceiving, and that's a very bad overall kind of plan going in as well. It used to trade really high compared to it is right now.
Dry's traded for over $1 million when I traded it. I was buying 1,000 lots of that all day.
And that was from your Lambo chapter too, right?
Correct.
All right.
Correct.
So, anyways, that's why I love this stuff. Whoever thought we'd be talking about dries and it trading for $400,000 a share. But anyways, so that one doesn't go well. You held for a year and a half, and I mean, what made you hold for that long? Was your buddy still telling you that whole time to hold, or were you finally getting involved in the wonderful world of message boards and social media, and you had a bunch of pumpers telling you to hold? But I mean, a year and a half, that's quite a bit of time. So what was keeping you in for that long?
Well, the only thing that was keeping me in was I figured, well, because I was expecting it to pop in like kind of the April, May area, because back when I was looking at the chart, that's kind of when it popped. So I waited, and then I figured, well, maybe next year it'll happen again. So I waited the next year. And then, of course, nothing happened, and then it's like, all right.
So where I was trying to go before Clay had to remind me that I was trading dries for $1.5 million a share was, so the logic behind cyclical nature of penny stocks is actually pretty sound. It's not an uncommon thing. And, the problem is, though, is it's pretty much people moving into a stock that they're like, oh, it's pumped before, so it'll pump again. And don't get me wrong, sometimes history repeats itself. But on the other hand, there's other times, like you said, even with you giving an extra year on the cycle, sometimes it just doesn't happen. And Clay, correct me if I'm wrong, there is almost a set amount of tickers that people will rotate in and out of, and it's got some brief pump, and then it gets halted, and then it goes right back down, and it just kind of moves and rotates around in the penny stock world. Am I correct in thinking that?
There are some, and then you get in the world of promotion, and you know that, all right, this stock has a track record of being promoted, so some people follow them.
And a name change, and a ticker change, and a management change, and now it's in pot, and now it's in energy drinks, and so it just kind of rotates around. So I actually understand the logic of your buddy trying to utilize that information to kind of get into certain things, but at some point it sounds like you kind of throw in the towel and you're like, forget it. And did you get out with anything, or you still have that now?
Well, I only jumped in with $300 at the time, and I got out with about 80.
Okay. Well, granted, it's still a big loss, but you did really good at the onset by keeping kind of your investment small. So, and I definitely use the word investment because you're not trading at that point yet, at least in my opinion. So you got this bitter taste. You just lost about, a couple $100, and, are you just bitter about the market now? The whole thing's rigged, or your interest still peaked and you're going back to him asking, what the hell we do next?
I wasn't really like bitter about it or anything, but I was just like, well, it didn't work, kind of wasted that time, but whatever, I don't know what I'm doing anyway. So I kind of went back to him and said, what do you think I should do now? And he basically just said, well, find some other stock, put some money in, and see what happens. And I was like, I think I'm gonna go find somebody who knows what they're talking about. So so then I just started doing the internet surfing, look for people who knew about stocks, and I found about 3 or 4 people I was looking at originally, because I was I found you guys, I found I can't remember his name right now. Sasha something. He's some Russian guy. And then there was I looked at like Tim Sykes, and I was like, this guy seems like a scammer. And then went to some other guy. I can't remember his name at all right now, but I kind of felt the same way. So then, as I kind of juggled between you and that Sasha guy, I was like looking at his website, looking at his classes he offered, and it was like I mean, he had so many different classes on like psychology and stuff that it was just like and then I was looking at your website, and it's like yours is like more condensed and I know to the point, and I was like, I think I'm just gonna go with this guy. And then when I first found you, I was like, I saw some of your videos, I was like, who is this guy? He looks like he crawled out of a frat house, because I was like, he's just all like, I was used to looking at people on the internet, wearing suits and ties and all that kind of junk, and then I got this guy talking about stocks, and I'm like, what in the world? But then when I got on your website, looked around, I'm like, well, it makes sense. And, you're not like hyping stuff up like some of these other guys were trying to make a big deal out of they're making a more big deal about stuff than they are actually about, trading and learning and stuff. So eventually I just, bought one of your courses, or well, actually I bought 2, but I started off with your opening course, your robotic training. And then I did that for a while. And then I went and bought the, risk versus, or the R versus error class, and then I just been I ran through those for about a year, just kind of going through and doing all the paper.
Okay, we'll cross that bridge. I want to come back to, because I'm always curious how people approach the courses, and that way fellow members can kind of just get maybe some ideas of how they can approach the course. But so I look like I crawled out of I mean, that's good stuff. And that's kind of, I'm glad. But is it safe to, I don't want to put words in your mouth, but to kind of summarize, did you notice how some people seem to be selling the dream more than just actually selling how they're going to teach you? I mean, is that kind of how you felt with some of those people?
Absolutely, because it was all like hype and, the stock market can get you this and get you that, instead of actually going, this is the stock market. You know what I mean?
Right, and that's why I'm props to you, because it's frustrating, it's irritating how many people are like, they see the glitz and the glamour. And don't get me wrong, the stock market, I mean, the sky really is the limit. But to get to that situation, there's a lot of work that needs to go into it. And if you go into the right mindset, I mean, it can happen. But to have somebody just focusing solely on that, for you listeners out there, please be like Josh. And sure, he didn't describe it as, I noticed that they were selling the dream, but that's basically what he described. Hype, all this sort of stuff about what the stock market can get you. Yes, it can get you that, but how is it going to get you that? And that's where they just gloss over. And this isn't really my opinion, because I've lost track of how many people I've taken this person's course, and all they do is talk about themselves the majority of the time. I've taken this person's course, and all they do is talk about how great this trade was. But I don't really understand what's going on, because all they're doing is talking about themselves the whole time. And it's just like, yeah, some people are really good marketers, but when it comes to teaching, there's a lot that they kind of leave out. But so yes, Josh, that's a breath of fresh air. That's encouraging to me, because Ches, isn't it frustrating when you see people in the customer service box and you hear their horror stories about being taken, and it's like, well, why did you even listen to all that hype in the first place? It's frustrating, isn't it?
It's absolutely frustrating, but at the same time, I subscribe to the idea that you need to kind of embrace and accept the decisions you've made. So my whole thing is that you need to do most of your research and, all the research and stuff you can on a person prior to kind of investing. But when people say, oh, they got taken and, I lost 97% of my $100,000 account, in reality, they pulled the trigger. I don't feel bad. I feel slightly bad, but it's still ultimately their fault. So yeah, it does suck to see, but yeah, people come in all the time with those kind of stories, unfortunately.
I'm with you. I don't feel bad, but it's still frustrating that people allow themselves to fall for that stuff. So again, Josh, all the credit to you for recognizing that. Now let's circle back to, you got robotic trading, you got RVR trading, and then you mentioned it took you about a year. So, and I'm not saying that in a bad way. I'm just saying, how was your approach, to the courses? How did you actually go through them and start to study them? Were you paper trading alongside, or what was your kind of method of going through, each of these courses? That ultimately took you, it sounds like over a year.
Well, what I did was I initially just went through all the courses, just watched them all, and just basically just kind of soaked it in. And I kind of went through them like a couple of times, and then after that I went on and found, got on a website like Trading View that had like paper trading and stuff like that. So then after after 2 months of watching your videos, I went and started doing the paper trading off their website, and then just kind of been practicing and just trying to basically figure out what kind of, doing the pullback strategy, doing the panic buy, that kind of stuff.
Yeah. So I know, based on the scheduling we had to do for this podcast today, the fact that you work a full-time job, I'm assuming when you say paper trading, you are swing trading, right? You're holding for multiple days, trading off the daily chart?
Yeah, I'm trading off the daily chart for multiple days and stuff like that. Originally,
okay, cool.
Yeah, originally I tried doing like the 15-minute and just let it, ride all day. And I'm like, no, that's not gonna work.
Yeah, especially if you can't be watching it. And we sometimes have some people who join the community and they're like, oh yeah, I'm long. This trade's going great. I got to go and do a business meeting, and then I got to go to a business lunch. And then they come in at, 8 o'clock at night and they go, well, yeah, that big winner turned into a large loss and I'm still holding it the next day. And I'm like, yep, that's what happens when, if you want to be a day trader, you got to dedicate your time to the screen. You have to be available, I guess I should say. So there's definitely plenty of ways to kind of get involved in the market in just about any time frame you want to utilize. So glad to see you realize that swing trading would be best. But Now, so TradingView gives you a lot of flexibility in terms of paper trading. Were you paper trading with the size of the account you're actually going to use when you go live, or were you utilizing whatever they offer you, which is like $100,000 to start?
Well, when I first started, I was doing the $100,000, and then I kind of realized what I was doing. I'm like, oh, well, so I just scaled it back to basically what I would be using to actually trade, and then just kind of went from there.
Gotcha. And it's another good thing that you kind of recognize that pretty early, because we have some people who just set unrealistic, expectations, and they go, oh yeah, I could be trying to trade like Clay going for 10, 15, 20 cents on 1,000 shares. And then in reality, they can only trade like 50 shares, and they wonder why they're holding trades that are winners, but not long enough. So it screws up your mindset. So I'm glad you kind of recognize that too. So obviously you paper trade for a while. At what point do you feel comfortable enough to fund an account and go live?
Well, I got to the point where I was getting about 50, 55, 60% winnings just doing paper trading, and then I kind of peaked out right there. I never really got to the point where I hit like 70 or 80% or anything like that. But once I hit about 55, 60%, then I figured, if I'm hitting it this consistently, then I think I'll be all right to do some small trades. So I just funded my account and started just doing maybe 100 shares here, 100 shares there, doing that kind of a thing.
Okay, Mike, real quick question. Because you're throwing out statistics, which is great. I'm all for data and stats. I'm not very familiar with TradingView and their whole paper trading setup, but where did these win rates come from? Were you tracking these in a spreadsheet, or does TradingView software spit out this data in terms of your percentage wins and all that?
There's like a little summary you can look at, and it'll kind of give you like a breakdown of kind of what's going on. So I just kind of went off of that.
Oh, okay, so that's part of TradingView software. It's not like you had some elaborate spreadsheet set up or anything.
No, it's got all the tools there for you.
So I guess I'll just throw this out to both of you. We'll let our guests go first, but Josh, would you recommend TradingView paper trading? Is that a pretty good setup? Like I said, I've never done it. I'm not that familiar with it, but were you pretty pleased with it?
I mean, I liked it. It's pretty easy to use. The only thing I would say about it, I mean, it's not a big deal to me, but if somebody else were to use it, the only thing I would say about it is you can do stocks, but as far as I know, you can't do if you want to do options or anything, you can't. It does not set up to work that way. It's just stock strictly.
And then Ches, same to you as far as TradingView as a paper trading platform. I mean, would you agree that's a pretty solid platform?
Yeah, and for context, you remember I was on this platform well before paper trading existed, so it's been cool to see them progress. It's definitely great as a free tool for users. Some people, Thinkorswim has a paper trading platform as well, but it's a little bit more difficult. In fact, I'll say it's a lot more difficult. So TradingView keeps it very, very simple. But in terms of their paper trading platforms, yeah, it's very, very good if you are working on your technical analysis. So just pretty much your chart reading. But obviously options and things like that are a little bit more complicated. And no, they don't have an options chain or anything like that. But in terms of buying and selling shares on paper, yeah, it's definitely a good platform. They've come a long way since when it started.
Yeah, and it sounds like Josh was saying, they have good analytics in terms of, hey, here's the data about your trading. And so that's good to know, and there you go. FYI for you listeners out there. But remember, don't go into this. You got to keep things as realistic as possible. And unless you plan on starting trading with $100,000, make sure you manipulate that number down to whatever number you plan on actually going live with, or else you are going to be misleading yourself in big ways. So, Josh, you said that you got the numbers up to where you wanted them, and then you went live and you funded an account. Who was the first broker that you used to trade with?
I kind of looked around and I kind of settled on Charles Schwab.
Okay, and just out of curiosity, why Charles Schwab compared to the many other online brokers out there?
For one thing, I mean, for the most part, they're cheaper than some others, and then I mean, I kind of like the way their platform worked, but now they just kind of switched it up a little bit, which kind of, I mean, I think it's okay, but I kind of like the older platform better, which was because they changed from it was Options Express, or not Options Express, but Schwab Express, something like that. and then they swapped over to something called Street Smart. I mean, it's basically the same program, but it's just laid out a little bit different, which is not a huge deal, but still for the most part, I mean, it's one of the cheaper ones for the most part.
And when you went into going live, you were fully planning on swing trading. Is that right? Or I mean, were you wanting a day trade?
Yeah, I was just going for the swing trades because there's no way I was going to be able to day trade.
Okay, all right, and that's good because I was thinking Charles Schwab from a day trading perspective, those fees would be really brutal. But that makes a whole lot more sense now, knowing that you had plans at that point where you were going to be doing swing trading. So you start with Charles Schwab. You fund your account, and you mentioned that you just started, doing kind of 100 share lots. Now, my question here is, were you doing 100 share lots during your paper trading, or was this something totally different all of a sudden with now that it was real money?
Oh, I was doing 100 shares at a time.
Okay, even during your paper trading?
Yeah, even during the paper trading, because I figured I don't want to do anything crazy and then get in a weird habit or something like that.
Okay, I was getting ready to drop the hammer on you and say, well, what are you doing, Josh? You're practicing one way, and then all of a sudden you change it up when you went live, but shame on me. You're doing it the exact right way you're supposed to be doing it. So well done to you again. And again, listeners, this doesn't seem like a lot, but it is a lot. Josh said he was using 100 share lots during paper trading, and then when he went live, he was doing 100 share lots. He was keeping it realistic compared to what he would be doing. And I get, Clay, you're being way over dramatic. I promise I'm not. This stuff makes a difference, and you got to keep paper trading as realistic as possible with, genuine trading, to the best of your ability. So, what the criteria obviously was what you were practicing paper trading wise, but were you looking for pullback plays? Were you looking for breakouts? Were you looking to play patterns? What exactly was kind of the setups that you were looking for from the swing trading perspective?
The two I was looking at were just the pullbacks and then the breakouts. But
okay, I'm sorry, go ahead.
Oh, I was just gonna say I had a little bit more success with the breakouts than I did with the pullbacks, as I kept getting kind of whipsawed out of the pullbacks, and then the breakouts I'd either get in or I wouldn't trigger at all. So.
That's the beauty of trading right there, is because me personally, I'm the one who gets whipsawed on the breakouts, and I do best buying pullbacks. So, it's just another shining data point of, trading is very, very subjective in terms of what works for somebody isn't guaranteed to work for everybody. Now, in terms of how you even spotted these trades to begin with, where are you finding these tickers that you are thinking of trading? Is it just high volume stocks, or you utilizing the chat room at this time, or or stock twits, something like that, a social platform?
No, all I was really doing was just like when I was going through your videos, I just broke down all the website you guys talked about in your videos, like stock charts and FinViz and stuff like that, and I just kind of use those.
Cool. And that's obviously you've designed your own scans to have certain criteria that you're looking for, and like I said, that's the beauty of trading, is it can be, as we've had other podcasts in the past, a couple of weeks ago, where the person is super, super data driven and has thousands of spreadsheets and has transcribed all the courses. And then you could just do something as simple as, I'm looking for something above a moving average or whatever it is. So that's the cool thing about it, is that your personality will come out in trading. So how'd those first trades go? I know you said you got whipsawed on the pullbacks, but overall, how was it to start?
It was kind of hit and miss when I first started, because once I actually, instead of like just like the paper trading, it's kind of that mental thing, because it's not your money, so it's easier to throw trades down. But then when I went live, it was, I'd make a trade here, and then maybe I might get whipsawed out, and then I'd make a trade here, and then I'd sell way too fast, because I'd make like $20-$30, and then I'd just get out real quick, just kind of things like that.
Sure. So when you were putting these trades on, were you putting on a target and a stop loss at the same time, since you couldn't monitor them throughout the day?
Basically what I did was I put in my target, I bought in, I put my stop loss in my target, and then basically what I would do is I come home, and like if I had like a tall lower shadow or something, I would just get out and put in a sell for the next morning just to get out, because to me it was like, well, there's a long a long upper shadow, so I'm like, I better get out. So I was kind of just kind of being a little jumpy, just because it's now all of a sudden it's real money on the line.
Sure, and I'm going to call it, instead of jumpy, I'm going to call it a little bit more of an active management approach. And whether it has saved you some or cost you some money, only the data will really say that. But were you ever checking your positions throughout the day? Because we've had other folks, including myself, when I was trading while working, I'd be pulling up the chart every 35, 40 minutes if I had the opportunity and staring at it, minute by minute. And then I go, what am I doing? This is like a swing trade. I don't need to watch this every single minute.
Yeah, well, when I first started doing that originally, and then I kept getting yelled at because I was not supposed to be on my phone at work, so I just kind of dropped that habit.
Okay, now, what are you like? Do you feel comfortable? Can you tell us what you do for work?
I work at Boeing.
You work at Boeing. Nice.
Yeah.
So you build? Are you an engineer? Are you what do you do at Boeing?
Well, my job is I'm a sealer, so basically what I do is I just crawl inside the fuel cells and seal up all the seams where all the joints come in. I just seal everything up.
Yeah, get off your phone. You need to keep that stuff sealed up.
Yeah, I was going to say.
Now I understand.
I commend your boss. Yes, please keep those things. But Ches, we talk with somebody that works on airplanes and is crawling and fuel a lot. I mean, we talk to everybody on this thing, don't we, man? We just add another cool job of what you do. But so are you?
Sure.
Are you up in Seattle area? Is that the Boeing? Because I know you're in Washington.
Yeah, I mean, I work in the Renton site, which Renton's just half an hour away from Seattle, basically. So, I mean, pretty much Seattle.
Now, do you get Boeing options or anything as part of a retirement package or benefits package, or do you get anything like that?
They don't do that anymore. What they do now is if you go get a business degree, they give you I think 20 shares of stock, I think.
20 shares of stock in total, or 20 shares of stock?
Well, it's 20 shares of stock if you basically upon completion of a business degree or something like that.
Okay, but they don't do you.
Yeah, they don't do.
I mean, it's still worth $7,000 in cash at the current price, but I thought they would have been doing more stuff yearly or annually or something. Yeah. Huh? Interesting.
Well, I got this. One of the people I work with, she's she's been there for 30 years, and she has 20 stocks that they gave her back in the 1990s when the Boeing was $10. Now it's 300 and something bucks a share. So
she still shows up to work too.
Yeah.
Oh yeah.
She chose wisely in taking that stock. But I know Boeing's been just an absolute monster basically the past couple of years stock wise. But yeah, I'm kind of shocked that they don't, whether it be company matching or something like that allow you to get some shares. But I guess all the companies do it differently. But anyways, so that makes perfect sense now why you can't be, literally checking in on things during the day, because you have a very hands-on job. And to really just echo Chez's point again, please, by all means, pay 100% attention to your job, because we don't need any leaks or anything like that. But so you're doing the swing trading, and at first it sounds like it was just kind of you were very antsy. Chez said you were just very active in your management. So did it get to the point where you decided? Let me ask this: about how long ago was all this? Was this timeline wise?
Well, actually, not that long ago. I mean, I started active trading probably about 6 months ago.
Okay, all right. So perfect. So how long did this kind of, breakouts, pullbacks, getting whipsawed, and did you just push through it, or did you reach a point where you're like, you know what, I need to pause real quick and reassess things? So I guess pretty much just pick up what was the next part of your journey here as because you paper traded, then you went live. So, and now we kind of talked about your experience going live, but what was that next little phase?
Well, basically, I just for about a couple months, I would just take a trade, and then if it worked out, then I still at that point I was kind of quick on the sell trigger, so I'd do that. I mean, I guess I still am quick on the sell trigger, because if I see any upper shadows, I'm just I start getting really eyeballing it and putting in kind of moving. Well, a habit I keep trying to break is I keep moving up my stop loss way too close once I start seeing upper shadows.
And then I'm assuming you get stopped out, and then does it sometimes go in your favor?
Yeah, it's probably about 50-50, because I mean, sometimes I'll get out and then maybe like 2 days later it'll jump up like another 50 cents or that kind of a deal. But
right. So did you have something else you were going to add?
Oh no.
Okay, all right. So you're is it fair to say that this is kind of where you are right now currently too? You're kind of still got things to work on, but you are still trading with live money. Is that pretty much where things stand right now?
Oh yeah.
Okay. All right. So that's kind of a nice little segue that you provided. We always like to talk, things you want to work on, things that you think you're doing well. So you'd mentioned that it sounds like something that you continue to need to and want to work on is kind of your trade management perspective. Just out of curiosity, and I'm not saying that you necessarily have an answer, but why do you think you're so anxious especially when you see something going your direction? I mean, what makes you so anxious to want to move up those stop losses? I get it, there's those upper shadows, but I mean, why do you get so? I guess why so anxious when you see those certain circumstances?
I don't know. It's one of those psychological things, I guess, because it's once I start seeing those things, I'm like, well, it might pull back. It might do a little bounce off of a resistance here or there, but at this point, I'm still not like, can zone in on it and be like, it's going to bounce here, fly up here, do this and do all that kind of stuff. So now I'm still kind of, working through the whole, really getting myself in the zone where I can sit there and say, yeah, I think it's going to bounce here and do this and I can move my stop, this far up, and instead of like going way, instead of going like 1 bar below, I could basically get to the point where I can I can put 3 or 4 bars below if I think it's going to start showing some weakness and things like that.
Right. So I guess let's take so you the trade is obviously going in your favor somewhat. If you're moving up your stop loss and all that. But let's say that you don't move it up where, in your words, it gets too tight and you give it enough wiggle room, you give it enough space, and let's say it actually does pull back. Does that pullback make the trade negative, or does that pullback still put you at a green trade, but maybe just not as much of a green trade?
Just not as much as a green trade, because sometimes I'll go from like, make up, I'll be up 50 cents, 50, 60 cents, and then when it pulls back and I get knocked out, I might be like, 20, 30 cents.
Okay, and then it sounds like in some situations, had you not moved the stop loss up, had you kept the stop loss in an area where, sure, it would have been green, but not as green, but it sounds like in some situations, the trade actually would have continued to go in your favor?
Oh, yeah.
Okay, so like by how much do that, have some of those trades gone in your favor?
Some of them have gone like, not much, like, they might have, I've had some that went up, maybe 30 cents and then just dropped out and went down like $1. And then I've had some that went up like $1.50 and kind of like, what was I thinking about that one?
All right. So let's, and I promise you, there's a method to my madness. So by getting all tight, with your stop loss, yeah, you're how much profit are you adding cents wise? You're adding like another 20 cents per share. I mean, what do you think average is that you're actually adding by getting so tight with those stops?
As far as profit wise?
Yeah.
Probably really not that much. But it's just
okay.
But to me, it's like I'd rather be in the green with a small green than have to fall down into the losing areas.
Right. So I guess what I'm trying to get at here is you say had you just kept things a little bit looser and to the point where it would have been a losing or it would have been a green trade, but not nearly as green as I got in tight. You just made the comment that some of these went like literally $1 or more in your favor.
Oh, yeah.
So, I mean, just think about it. Even if you had a bunch of them where you let it, you gave it wiggle room and maybe that did pull back and take you out. Okay, you're still green, not as much of green, but also had you done those and had some of those frustrating, quote unquote, small green trades, you'd have also had some of those hugely upside ones, which mathematically speaking, assuming I'm understanding things right, I mean, that would have really tilted things much more so in your favor. So I guess my main point is I'm just trying to think out loud with you and how you can try to overcome kind of this difficulty. But I mean, it sounds like from what you just described, I mean, the math is in your favor if you let it be in your favor. So, I mean, don't necessarily look at it as I want as much green as possible. Just give yourself plenty of wiggle room because like you said, some of them have really gone in your favor. Does that make sense?
Yeah, that makes sense. But it's just like trying to get over this like weird mental thing I got going on about it.
Mental thing. Are you a pretty competitive person in in just any areas of life? I mean, would you consider yourself quite competitive?
Not really. I don't really think of myself as really that competitive, but I mean, nobody likes to lose, but I'm not like this kind of guy who goes crazy if I don't, if something goes against me. But at the same time, it's like
Clay.
Yeah, you're not throwing golf clubs all over the place. You're not Happy Gilmore in it. All right, let me ask this: Does your job? It sounds like you need to be relatively precise, relatively detail oriented. Or am I just way off on that assumption?
Oh no, I mean I don't have to be like extremely detail oriented, but I got to be able to be confident. I'm getting well, I don't want to get too like worky on you, but I just got to make sure I get all the seams, all the a certain amount of I don't want to nerd you out with that kind of junk, but just
no, go for it. I'm fascinated, but I guess what I'm trying to determine here is what is going on in your psyche, what is going on in kind of just your mental makeup that makes you just want to grasp on, even though that sometimes I probably shouldn't be doing this, but I'd rather just take it. Like you said, you have this mental thing going on, so I'm just trying to, if we can identify the root cause of it, maybe we can, get the solution of it. But I don't know. Are you somebody that just that enjoys being right and it drives you insane when maybe something doesn't quite work out? I mean, that's what, does that sound like it could be any sort of possibility? Like, you just like to be right?
I mean, maybe a little bit, but I think more of it's just like, I don't want to like do this weird like backstory, but I kind of grew up, not really poor, but not maybe in the lower middle class kind of a deal, and then I always watch my parents pinch money, so then now I kind of got that same kind of pinch the money mentality.
Bingo, that's it right there. You nailed it. So I guess it's just really, I think what would really help is if, all right, let me run a scenario by you. Let's say that, if you get stopped out or kind of just a bad trade, you're going to lose 50 cents. How does that make you feel?
Yeah, it kind of bums me out a little bit, but I don't like, go too crazy about it.
Right. It's 50 cents, right? What happens if I tell you if something goes really wrong, you're going to lose $500?
Yeah, I'll get a little grouchy over that one.
Yeah, exactly. So my question is, let's say a trade, you're wrong, it goes against you. How much would you lose on that trade, dollar-wise?
$50.
So, I mean, $50, the thought of losing $50, how does that make you feel?
It doesn't like freak me out, but it does, kind of like, oh, well, that sucks.
Because you're a penny pincher, right? And $50 is like 10 crisp $10 bills. I mean, that's, is that kind of how you look at that? Is $50, man? That's kind of like a lot of money. That's like a tank of gas plus some. Is that how you look at that? So what I think what I'm hearing is maybe your position size is too big, because it sounds like the thought of losing you could potentially lose $50, you're just not comfortable with it. And because you're not comfortable with it, any sort of gains you see at all, you're like, that's it, I'm taking it, I'm out, I'm gone. Whereas let's say that your position size was, worst case you lose $20, $10. I don't know where that is in your human mind, but somewhere there's a number where you're like, yeah, whatever, it is what it is. I mean, you're not going to worry about it. Like $50 is going to impact you. It's not going to impact you like that. So I think that if you were to reduce position size or, make the loss where the loss is, like I said, I don't know what this number is for you, but let's just say $25. Then I think that you're going to find, okay, yeah, it's much easier to just leave a stop loss where it should be, because, if something happens, it's still only $25. But $50, it sounds like it has too big of an impact on you, which is then all of a sudden influencing, many of your other thought processes as far as the trade manager is concerned. Does that sound like it could be a possibility?
Yeah, that sounds like something I could probably work on, because basically what I do, I just went off the model that your class shows, about 2%, don't risk more than 2%, and so that's kind of basically what I did.
Okay, and that's great. You want to have, portfolio management. You want to have, you want to keep your risk under control. But if 2% equates to a number that that's still too big for me, because I grew up, like you said, I'm a penny pincher. My parent, I mean, $50 is a lot of money. Then that's math versus practical math, and your practical math doesn't really seem to be adding up. I mean, are you getting that vibe too, kind of, Ches?
Yeah, and I was just going to say, I struggle with something a lot, right at the beginning of my trading as well, is that just like you said, you had to give me the same exact advice where until I am comfortable with the amount I am risking, I'm always going to be in a position of weakness in terms of, like you said, just cutting winners early instead of kind of sticking to the plan. So yeah, it's all about kind of finding that comfort level. And once you find that comfort level, you'll let your trade plans play out how you planned originally.
Yeah, exactly. So, good. Hopefully this helps. Like I said, it's just my 2 cents, but you're gonna know yourself better than anybody else. But I think if you just have less at risk, then you're gonna see you're not gonna feel so antsy about it, because you're not gonna be like, okay, good, I'm gonna grab that win, because not only does that preserve the $50 that I could have lost, but now it's actually putting more money in my pocket. And then, like you said, all of a sudden you're leaving a whole lot more on the table. Where in the long run, I mean, the numbers just work out more so in your favor. Going, that pathway. But we've kind of been, hey, do this, maybe do that. So it's not like you're a terrible trader or anything. I don't want listeners to have it come across like that. But let's actually talk about, because those, that's something you want to work on. But what are some things that you would say and consider a strength? Some things that you feel you are doing very well.
I think one thing that I do pretty good about is I'm pretty consistent about when I get home from work. I basically spend like an hour and a half, just going through charts and stuff and kind of doing my homework for the next day.
Gotcha. Now, in terms of what you're looking for whatever potential trades you're going to be putting on, what indicators are you using? Are you using a bunch of moving averages and 10 indicators and 15 other things that are proprietary, or you keep it a little more simple?
I keep it pretty simple. The only thing I really use, I use the 200 moving, I use the 50 and the 20, and then I'll use the RSI a little bit, but that's about it. And then your volume and of course your that kind of thing.
Now, before Clay has an aneurysm, do you use candlesticks or a line chart?
I use candlesticks.
Darn it. One day we're going to get somebody who trades off a line chart and does really well, and it's going to be another data point that trading can be done in many, many different ways. But Josh, it's been an absolute pleasure having you on. Clay, do you have any more questions for him?
No, but I'm assuming and hoping you're willing to lend the time machine to him.
I absolutely am. It's not too far northwest of me. So if I was to lend you my time machine and you can go back to any point you'd like and give yourself one piece of advice, not a buy or a sell signal, what would that piece of advice be?
I think my piece of advice would be to go back about 10 years and basically tell myself to, get motivated now, because if I was doing this 10 years ago, I'd probably be, miles ahead down the road.
And I appreciate that honesty, because once again, for you listeners out there, especially to those of you that are maybe younger, I mean, the time to start is now. Well, I don't have that. That's fine. It's just the whole idea is once you start, you begin learning, you begin gaining experience, and from that you can build upon things. So, I think that's a great bit that you're certainly not alone in that. But if that can offer any of you younger listeners out there, just start. I mean, and starting doesn't mean you have to be making $1 million by the end of the year or anything like that. Just start to immerse yourself in this stuff, because there is a whole lot of great potential in it. So now it's time to get serious, as always, and we're going to talk about what really matters here, and that is the fun question. So, Josh, you're up in the northwest of the country, Washington. You work for Boeing, and you crawl inside of fuel lodges and keep us all safe by doing your job. But what is somebody like you? Your favorite movie?
Oh, my favorite movie has got to be Fight Club.
First rule of Fight Club: don't talk about Fight Club. Is that?
Oh yeah.
All right, there we go. So, are you
first rule of penny stocks is don't trade penny stocks? Sorry, I just had to put that out there. Now, in terms of food and dessert, what's your favorite food and dessert?
Oh, dessert's got to be just cheesecake, any style. I don't care.
It's hard to argue against that. I mean, cheesecake is Do you have a cheesecake factory up by you live by any chance?
Oh yeah, we got like 3 of them.
Man, Cheesecake Factory, if you're listening, please come to Grand Rapids. We're not a huge city. We're not Seattle or anything like that, but freaking Josh has 3 of them. How many are in Denver, Ches? Or I guess you're not really Denver anymore, but so that...
I don't know. There's got to be. I know there's at least one. I've been to one, but now I don't have actually any big chain anything out here at all. So
you just have big grizzly bears that want to rip your face off. I mean, that's all you have, Ches. And
that and elk and deer and stuff like that. That's pretty much mountain lions. Yep, had a couple of those at camp the other day, so that was fun.
Yeah, after you're done recording this, so you headed out to the bonfire to sing Kumbaya with Kelly, your wife. Around the
absolutely. She's already no, we're in a fire band, so no, we'll just sing Kumbaya around a little camp stove.
Nice. So what do you like to do hobby wise, Josh? Outside of the market, outside of just whatever hobbies.
I just like to go hiking for the most part. Just get up in those mountains.
Yep, hiking and camping are what we've done a lot of in the past year, but this year with the drought, it's been pretty rough. But Josh, has been an absolute pleasure having you on, like I said before. Now, if you had to pick 3 words that sum up successful trading or traders, what would those 3 words be?
I would just say discipline, and you got to be disciplined, consistent, and then just don't cheat yourself, basically.
So brutal. Honesty with yourself. Is that a good word?
Yeah.
There we go. I like it. Patience, discipline, honesty. Don't cheat yourself. Just keep it realistic. That's good stuff. And I had a good time. Like I said, I was nervous, and that was being honest, because sometimes you just don't know what you're getting yourself into. But hey, lo and behold, I'm talking to a guy that's got a cool job working for Boeing, and that's why I like to do this. So, Josh, thank you very much for hanging out. And thank you very much for volunteering to you listeners out there. I mean, this podcast is only good enough, it only functions as much as people are willing to take time out of their day, willing to volunteer. And Josh was one of those persons that reached out to us and say, hey, I'd be more than happy to be a guest. So, Josh, thank you much for that.
Yeah, thanks for having me on.
Yeah, and we will we'll keep us posted on things, and I'm sure at some point down the road, we'll have to have you back, and we can hear an update on all that is going on. But before you go as a listener, a final few things. If you are listening on the YouTube channel, be sure to check out the channel as a whole. There's lots of other videos, live trades, there's a vlog, quick tip videos, lots of different stuff. So check out the channel. Of course, make sure to like this video, but hopefully you decide to ultimately subscribe to the YouTube channel. If you're listening on iTunes or any of the other podcast players, be sure to subscribe. And then also, especially on iTunes, if you can leave us a rating, that helps us out. It goes a long way, and we truly do appreciate it. And then finally, if you are listening at claytrader.com on the show notes page, be sure to click that the share button. There we go. Click the share button. Down below, there is an area for comments. So if you leave a comment, we will read those and we will reply. So whether that's a comment, suggestion, question, whatever, get interactive with us. We will get interactive back with you. We kind of pride ourselves on that. So thank you, Ches. Thank you, Josh. Thank you to all of you as listeners. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.